Hi, I'm Arjun Patsati, and our bonds, and I'm talking to you about Svatantra Microfinance Limited. Now, when it comes to microfinance, I personally am a little bit wary, especially when the company is funded by private equity or venture capitalists, and then looking at growing very fast to scale up and attain higher valuations. Now, while microfinance itself, the business itself is growing very fast in India, largely because of the fact that you have a very vast population of um, uh, unbanked uh, borrowers. Uh, the business itself is subject to a lot of risk. One is that obviously the lending rates are very high. There are two factors that go into the lending rates, high lending rates. One is the cost of taking microfinance because it's a lot of personal involvement. You have a very wide, large uh, on the ground sales force that goes to villages and towns and works with self-help groups and others and has a joint lending model, and they have a very strong relationships and interactions with the borrowers because of the fact that it is largely unsecured loans to very poor and or very low income households. And but when and then the second is the cost of borrowing also is very high, largely because of the fact that the loans are unsecured and uh, goes into um, a very low income kind of a household. So all this put together, or even if it's businesses, it can go to SMEs and MSMEs, etc. But so with this, you already have a very high cost base, and then you have a very high lending base. And now microfinance companies, because of the risk they take, they look to end up with margins of at least 6 to 7% to justify their presence. And with all this, if they're looking to grow and grow fast, then it gets into more trouble because they tend to dilute a lot of their uh, the main objective, which is to one is both on a social and commercial basis. Uh, and then they might even end up giving loans to people, more loans than required to people, or more loans to people than they can afford to pay, etc. And after that, then it can go into some kind of a political realm. If, for example, in one area there are too much of loans given, and they are unable to pay, and then the government gets involved, especially during election times. So a huge amount of risk is involved in microfinance business. But having said that, you need to look at the business as a whole and the companies, what they're doing. And obviously companies, microfinance companies do need to borrow from the market. And as investors go, they need to look at higher. These are some companies that can give them a good return on their investment, as well as companies they can, to a safe extent, large extent, make sure that they do not do anything foolish in terms of growing too fast or in terms of trying to please uh, 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 please commercial capital that is invested in the company through private equity, or even if it's a public limited company, because then, as we know, if it's an IPO kind of a thing, or if it's listed, then you have shareholders demanding faster growth and higher valuations, right? So in this context, Swatantra Microfinance is promoted by the Birla family, Aditya Birla, Kumar Mangalam Birla family. Kumar Mangalam's Birla daughter is the main driving force of the company. And this is very focused towards women uh, uh, who are unbanked, largely unbanked or below middle class. And the one good thing about this is, given that it's family promoted and promoted by one of the most renowned and reputed and financially stable family in the country, uh, and that they do not have any kind of they do not have any kind of objective to go and throw loans at um, to grow, show growth. Yes, they need to grow because they have to give more and more loans to unbanked society, especially women. But that's the main objective. Uh, but they don't have an objective to grow to show valuations. And if you look at their financials, if the NPAs are very low, the balance sheet size itself is very low. That's about least 35 billion or 3,500 crores. And they can grow very slowly. I think this company has been in existence for a few years now. So they're not really gone ahead and grown very, very fast. But they're growing slowly and steadily, keeping NPAs low. Leverage is high, yeah, about over six. But with access to capital from from the promoters itself, and the fact that capital adequacy is still over 20, with low NPAs despite the COVID and other things, then is one of the few microfinance companies that are showing low NPAs despite COVID. Um, and because many of the microfinance companies in the market, due to COVID, their NPAs have shot up very sharply. And with this, despite the last 2 years of COVID, NPAs are still pretty much reasonable. And so this shows that there is focus on the quality of lending. The pace of growth is very low. There is no great, there is no great, um, there is no great urgency to grow because it's not commercially funded, and as it's promoted by one of the most reputed families in the country, with focus on social obligations. Obviously, to some extent, they need to be profitable as well, and they are maintaining moderate profitability. I think so. Hence, the rating itself is A, uh, largely stable. So this issuer seems to be at least as long as they are able to maintain their NPAs at lower levels, maintain a steady pace of growth rather than breakneck growth, not looking at valuations, and keeping it sufficiently capitalized. Bonds in the 1, 2 to 3 years kind of a maturity uh, could give the kind of risk return profile investors require. But obviously, as I mentioned earlier, all microfinance businesses come with risk. So investors do have to be aware of the risk of every microfinance issuer. Yeah, thank you very much.